Thank you very much, distinguished guests, ladies and gentlemen. I'm glad to be here. I will give a little bit overview on the Indonesian market. This is more on the stock market or capital markets perspective, because basically my background has always been in the capital market. Before moving to Macquarie about 3 years ago, I was basically heading the BNP Paribas Securities in Indonesia from 1997 up to early 2008. So as we understand, then price to earning ratio is the share price divided by the earning per share. And we are looking towards more on the future earnings growth 1 year from now. And this is Indonesia valuation and this is the earnings for the market, EPS growth. The EPS growth is actually the highest in the region, about 24% for 2011, while the average for the Asia Pacific valuation is about averaging around closer to about 16-17%. And just wanted to mention that basically in the past 10 years, the Indonesian stock market performance in the past 10 years was averaging around 24%. And since SBY took power back in 2004, the index was actually averaging around 28% per year. This is compounded annual growth rate. So the stock market performance has been quite phenomenal in the past 10 years. This is despite the significant drop in 2008 when the stock market performance were basically the index down by 50% in 2008. Despite the economic performance and the EPS growth for the listed company actually performed very well, but the index was down by 50%. This is partly because of global financial crisis, as well as the Bakri Group debacle. Basically, the one that causing the stock market drop back in 2008 was mainly the Bakri-related group of stocks that have been dragging down the market. So, like I mentioned previously, the Indonesian valuation is actually slightly premium compared to the Asia Pacific market valuation, but we think that the valuation is actually warranted given the structural and sustainable growth for the market EPS growth over the medium to longer term. And three reasons why we think that the valuation premium in the Indonesian market is actually warranted. Firstly, because of the possible upgrade in the sovereign risk rating for Indonesia. Currently, Indonesia actually for Moody's and S&P, they are giving Indonesia 2 notches below the investment grade, this one, and Fitch rating providing Indonesia 1 notch below the investment grade. Going forward, we believe that over the next 1 year, Indonesia will be moving from 2 notches below to investment grade, partly because of the sustainability of growth and also the government debt budget deficits is quite sustainable, as well as debt to GDP ratio is relatively low. It has come down from about 100% to 25% currently. And more sustainable growth as indicated in the past 4 years. And if we see that during the global financial crisis in 2009, the Indonesian GDP growth still grew by 4.5%, while the other country in the region basically experiencing a negative GDP growth, except for China and India. And if we look at the market, this is the listed company earnings growth in 2009. It was still grew by 16% EPS growth. So profitability for the Indonesian listed company still grew by 16%. This is the sectoral EPS growth that driving the market. And the last thing, the third reason why we think that the valuation premium is warranted is because of high return on equity. Like Pak Irwan mentioned that the return on equity for the Indonesian company is at least 25%, and for the listed company, we're expecting that to reach around 27% in 2011, which is far higher than the rest of the regional country comparison. The second highest was actually India and Thailand with about 18-17%. In the past 3 to 4 years, in the past 4 to 5 years, Indonesian market return on equity actually have grown from about 22% to 26-27%, mainly because of two reasons. First is the emergence of the resources sector. Like coal mining companies actually have been coming into the market quite aggressively in the past 4 to 5 years. And because Indonesia have a competitive advantages in the resources sector, the return on equity for the resources sector is actually pretty high. And the other reason is also corporate tax reduction, because in the past 3 years, the Indonesian government actually reducing tax rates from 30% to 28% level last year and 25% this year. And for listed company with more than 40% public free float, they will get another incentive for another 5% tax reduction. So tax rate will actually coming down to 20% for listed company with more than 40% public free float. So these are the three reasons why we think that valuation premium to the Indonesian market is warranted. And this is just index competition, composition for the Indonesian market, historically back from 1996, 2001 up to now, and then this is the future that what I'm expecting over the next 4 to 5 years. In 1996, the biggest chunk of the index composition was actually the consumer goods and infrastructure and transportation. Financial sector was only about 14%. Consumer good, there are several big listed consumer company in the past. Two cigarette companies, Sampurna, Gudang Garam, and Indofood and Unilever. But the importances of consumer good company actually have declined because of Sampurna actually went, practically private. No longer included on the index because of Philip Morris actually bought Sampurna over. And financial sector actually went up from about 12% to 27%. This is because back before the Asian financial crisis, Bank Indonesia is not a bank practically. It's just being used as a bank for a group of conglomerate to get their deposit money and to finance their investment project. That's why during the Asian financial crisis, the non-performing loans for the bank shoot up from less than 5% to suddenly can be up to 60% non-performing loan. But since 2004, Bank Indonesia has started, Indonesian bank have started to become a real bank. So valuation has become the most expensive in the world because of the healthiness of the the financial statement, capital adequacy ratio. So now banks are represented about 27% of the index. But going forward, I'm not expecting bank to continue to become a significant composition. It's still significant, but it will be reduced because of other sector. I'm expecting to improve in terms of performance on the stock market. And if we look at the exchange rate back in 1996 was about 2,300, but now it's currently at around 8,900. But it is very possible that the exchange rate could easily go back to 6,000, 7,000 over the next 2 to 3 years. Okay, what are the positive catalysts for the market in Indonesia? Basically, lower penetration rate. I think in terms of penetration rate in Indonesia, in general, they are relatively low. Loan to GDP ratio is the lowest, only about 25.8%. loan divided by GDP. And if we look at other car volume in the past several years, actually has been very strong. This is a 3 months moving average. Car volume have been averaging around 60,000-70,000 in the past 1 year or so. Well, there is a decline, but this is mainly because of the September month, because of the Ramadan season, it's big holiday, so 1/3 of the production came down. Same thing as motorcycle. Every month, motorcycle volume actually, Indonesia is selling about 700,000 motorcycle per month. So that's why if you go to Jakarta, there, well, a lot of motorcycle, you know, because in total I think there are about total motorcycle volume could reach around 45 million units in whole around Indonesia. Retail sales also recently after the April-May 2009 continued to move up quite significantly, and also the cement consumption. Okay. Per capita incomes also rising fast and more spread out growth. Investment actually have been very robust. This is the per capita income. Basically, since 2005 up to 2010, the income per capita actually have been more than doubled, from 1,300 US dollar per capita to close to 3,000 US dollar by the end of 2010. This is quite a significant growth. And foreign fund inflow also in the equity market. And just wanted to mention that this is a sectoral workforce. Agriculture still accounted for a big chunk of the total employment in Indonesia. Although in the past 4 or 5 years, agricultural employment actually have not moved. And then for the first time, basically agriculture and resources sector reached below 40% of the employment. This is just recently. In the past, it represented about 44% of total employment in Indonesia. But now, because of more investment coming in the manufacturing sector, trading sector, this actually has declined quite significantly. As of February 2010, it has reduced to below 40%. So, the second positive outlook is that we are expecting minimal rate reversal in 2010. Interest rate may go up by 50 to 100 basis points, but this is still one of the lowest level ever in Indonesian history, because before the Asian financial crisis, the interest rate, benchmark interest rate, has always been hovering around the 11-12% level. Now currently at about 6.5%. And we're expecting that to go up by around 50 to 100 basis points, which is still very positive, very benign, and then good for economic growth over the next 2 to 3 years. Sovereign risk rating upgrade is also very possible over the next 1 year. And in terms of GDP growth, I'm actually more bullish than Pak Irhan data, because I saw in Pak Irhan data, the GDP growth for 2010 is about 5.5%. We're expecting about 6% and then 6.5% in 2011. And this is going to be the third fastest in the Asia, and the only country in Asia that will experiencing a GDP growth in 2011. While other countries, even China and India, basically will be experiencing a flat or slight decline in terms of GDP growth in 2011. If we look at the government bond yield, this is a 10 years government bond yield. It actually has come down quite significantly. Well, this is the spike back in late 2008, spiking to around 20% level, but now it has come down to closer to 7% level. This is one of the reasons why the equity market, stock market performance has been very strong in the past 2 years. Back in 2009, the stock market performance was up 124% in US dollar. And year to date, from January to December this year, the stock market performance has been up by 55-56% level in US dollar term, although in local term it's only about 47-48%. Okay, well, this is more on the politics. The third positive news: less political uncertainty, more reform and investment. Well, this is just a slight comment. Next election is not due until 2014. And looks like that SBY legacy can be continued. We think that the next leaders could be coming in from two possible names, Anas Urbaningrum, which is the head of Partai Demokrat, and Budiono, which is the current vice president. So we believe that Anas could basically run as a president, and Budiono will continue to become a vice president because he's a technocrat. He's very good in terms of economic policy. So those two guys will probably be going into the election for 2014. Although this is too early, anything can happen to politics. But this is our first glance on the politics. Also, SBY parliamentary support now is actually pretty strong as compared to back in 2004, 2014. Partai Demokrat controlling about 26.8% of the total parliamentary seat in Indonesia. So we think that this actually, he can have the capacity to push through reform, especially on the infrastructure reform, like what has actually been said by Pak Irhan. And just wanted to mention FDI. FDI in Indonesia actually have coming in quite strongly in the past 2 years, and investment actually have reached a very high level in Indonesia, because as of the third quarter, from January to September this year, investment as a proportion of GDP have reached about 32%, which is far higher than before the Asian financial crisis. Before the Asian financial crisis, during Suharto era, basically the peak of the investment out of a proportion of GDP was about 30%, and that was actually happened in 1996 when investment out of a proportion of GDP reached about 30% level. But now we have exceeded that 32%, and this is pretty much in line with India, but it's still far behind China. China investment out of proportion of GDP is about 45%. But this is a step in the right direction, in my opinion. Okay, this is the data for FDI and domestic investment, and companies actually have investing in the manufacturing sector in Indonesia, quite significant companies, South Korean companies, even the American company General Motors, Nestle. 2 days ago they mentioned that they're gonna start their manufacturing for Milo and some baby infant products in Indonesia, investing about 100 million. And as a result of this, capex spending actually have been very robust in the past 1 to 2 years. Yep. Unemployment, it's still a bit a concern, but actually if you look at unemployment in the past 4 years have come down from about 10.4% to about 7.4%. This is as of February 2010. And import of capital goods, this is actually leading indicators of the FDI coming into Indonesia actually have shown a positive data. FDI have gone up from what 400, import of capital goods have gone up from what 500 million, 400 million back in early 2004 to about 2 billion, more than 2 billion US dollar per month recently. And corruption perception index basically has improved. I mean, corruption has becoming less of an issue, but still I think lots of things to do. The previous finance minister actually have done very well in terms of reducing corruption, especially in the custom department and then in the tax department. Although I think still lots of things to do, but if you live in Indonesia, basically you've seen that actually corruption has become, has been reduced quite significantly in the past 7 to 8 years. Okay, this is just basically earnings yield gap. 1 over PE, 1 divided by PE, and comparing to the government bond. The earnings yield actually is higher, which indicate that equities has becoming more attractive as compared to government bond. Okay, I've basically discussed all the good news on Indonesia, but I think this is still plenty of challenge. This is a risk, and I think things that Indonesia need to watch out. 3 things. Firstly, the risk to Indonesia will still be oil prices. High oil prices actually good for the Indonesian economy because Indonesia is a net exporter of commodities, although we are a net importer of oil. But given that the government is still subsidizing fuel to household consumption, every year Indonesia is subsidizing about 37 million kiloliter of oil. If oil prices were to go up to 120 US dollar per barrel and stay there for 4 to 5 months, then the government need to increase the fuel price. And that will be bad for inflation, and they need to increase the interest rate. And that will not be good for the stock market performance, for consumption, and etc. Currently, Indonesia still subsidizing the fuel oil at about 65, 67 US dollar per barrel. So the government actually is selling it at about 67. At the current oil prices of around 80 something, then Indonesia, the government actually is selling it, subsidizing at around 15 to 17 US dollar per barrel to the household consumption. Okay, the second thing is that infrastructure project in Indonesia have been hindered by the land acquisition law. In Indonesia, it's very difficult to clear the land. Land clearing has been an issue. Financing, to get the financing from the bank is no longer an issue, but clearing the land actually has been an issue. So the government is about to issue a new land acquisition, which basically gonna expedite the land clearing. And then as soon as the government mentioned that they're gonna use the land for infrastructure, the government has the right to confiscate the land and then pay at market prices. Basically, in the past is that it's easy to acquire 90% of the land, but the remaining 10% is difficult because some speculators buying the land and asking for 5 times or 10 times the market price. And that actually have escalated the cost and causing the project to get delayed. So this is going to be very crucial for Indonesia. And SBY is expected to submit these land bills to the parliament next week, the 15th of December. And we hope that the parliament can pass this law before the end of first half of next year. And the third race is basically liquidity tightening, but I think it should not be an issue as long as the global liquidity condition remain very firm. Indonesian company can get direct financing from overseas financial institution. Okay, I think I will end my presentation, and then we can basically have a discussion further. Thank you.